Stocks sold off today. The broader markets, Tesla, basically everything. And we're going to have bigger catalysts, believe it or not, to come tomorrow morning throughout the rest of this week. And I want to give you guys a little bit of a warning for tomorrow, but overall talk about this situation. How bad could this sell-off get? And what do you need to know? Now, on top of that, we do have some pretty cool news, pretty good news coming out for Tesla as well here in after hours, including multiple Cybertrucks being transported on car transporters. And we're going to get into that. But first, gotta take a sip of tea. Say Tesla to the moon.
To the moon.
Okay, all right. So for all Tesla stock investors out there, I think it's important to understand what's currently going on with this stock and the broader markets. And I would say about 90% of this sell-off that we're getting in the markets really has nothing to do with the Fed. It has nothing to do with even valuations for our markets. Because sure, your big tech stocks, they're overvalued. And Apple and Microsoft, your big tech names, are expensive. But under the surface, the S&P 500 is, well, in line with relative historical PE multiples. It's not that expensive. China's the problem. China is experiencing deflation, which is actually worse than inflation.
You cut prices, that means your revenue is going to decline. And that also means that eventually you will have to cut wages and possibly laying off workers. And that feeds through to households' income and also the decline in consumer spending.
This vicious cycle could lead to a recession or even a depression.
So deflation can lead to depressions or at the very least recessions. That does not have a positive impact to the markets when China is the second largest economy in the world. And we do a lot of business with China. Think about some of your largest companies in the world. Well, I can think of an Apple and a Tesla right off the top that does 35 to 40% or more of their business in China. If China does not do well, then it's going to be pretty hard for a vast majority of our markets to do well also. Or I should say maybe specific companies, which would in turn have a big impact on profits and EPS. And that could make the markets a lot more expensive than we think. So for these justifiable reasons, stocks have been selling off. And I really think you should take a listen to what this analyst has to say about this really bad situation in China and how this could affect the rest of the world and could ultimately affect our markets.
China's economic slowdown could mean for investors. Let's bring in David Riedel. He's the president and founder of Riedel Research Group. David, welcome. Good to have you with us. What do you make of what's coming out of China? They're not going to now publish youth unemployment numbers, obviously because they don't like the numbers, and that has nothing to do with improving the methodology, for goodness sakes. But also they have big problems in the property sector and a consumer that is relatively, I would say, defensive right now.
Yeah, I really think a lot of people, myself included, were expecting the rebound after the COVID reopening to last a little bit longer. I think Beijing was expecting it to last a little bit longer as well. I think the reality is that during COVID, the rest of the world figured out that their supply chains were far too dependent on China. So they diversified their supply chains. They diversified to India, to Indonesia, to Mexico, to other places. And so when China opened back up, I think they found themselves without as many friends as before the pandemic. So I think some of this is self-inflicted. Some of it is the reality of the external world changing, but it's really a problem. Add to that demographics and a slowdown in overall growth, and I think you've got some trouble for Beijing.
Tim?
David, it's Tim. So I agree on the Japanization, so to speak, of China. Your notes, you also, though, rightly point out that 2 to 4% growth doesn't mean you can't invest in the region. Sentiment is as weak and as poor as I've ever seen on China, and I've been looking at China a long time. You talked about EDU. Some of the internet names are ones that I think are less about the macro than they really are about what the government is doing with the sector. Can you talk about opportunities there?
Yeah, I really think we've talked about this before. I think that we're telling our clients that we don't expect Beijing to have any big crackdown on tech, any breakdown like they did with Alibaba a couple of years ago and Jack Ma disappearing and so on and so forth. I don't think you're going to see that because that would be a self-inflicted wound for Beijing to add more fuel to the fire of investors turning away. So I think you're actually going to see some domestic stimulus, maybe voucher programs or rebate programs, encouraging people to buy that new air conditioner or washing machine or electric vehicle to really drive that domestic consumption. They like to have things that Beijing can control, and they can't control the export environment right now. So I think they're going to try to build up domestic consumption to the extent that they can. But their wallet is not unlimited like it was before the pandemic. They can't just continue to spend their way through and borrow their way through these kinds of rough patches in their economy. So this is a brave new world for China, and one that's going to be tricky for Beijing to navigate.
Now, Tesla tends to do better than the markets in good times and worse than the markets in bad times on a percentage basis. So if the NASDAQ is up any given day, Tesla tends to be up 2, 3, 4, 5% on that same day. Well, to the contrary, if the NASDAQ's down 1%, Tesla tends to be down 2 to 4%. And that's exactly what we've seen today, including the move down in after hours by about 0.57%. And the down move in regular trading today, down 2.84%. You're down almost 3.5%, which is in line with what you would expect to see when the NASDAQ was down about 1% today. But Tesla is in a really bad spot as well, just considering a lot of their business is done in China. And Tesla is far from the only one with this problem. A lot of other companies, lots of them, do business in China. So you might start to see a little bit more weakness in stocks that do more business over in China. Now, this situation could just be a mild correction. You've already fallen about 6% or so from the highs on the NASDAQ. So you're more than halfway through a potential correction. A correction's around 10% from the highs, a fall. Well, where this situation could get a whole lot worse is if the U.S. economy starts to look like it's heading into a recession as well. Then you get fears of a global recession. And good news is we're not seeing that yet. Retail sales came out today, positive month over month, 0.7%. So very strong growth. The Atlanta Fed GDP Now tracker is expecting about 5% GDP growth, which would be absolutely insane. And if you look at the estimates for the Atlanta Fed GDP Now tracker, like I said, you're at 5% is the expectation for this quarter's GDP report. And it's been going higher. The top 10 highest estimates from analysts and top 10 lowest estimates, the top highest is about 2.5%. The top 10 lowest estimates are negative about 0.3%. So the consensus view is that growth is actually picking up right now. And I think this, to some degree, keeps a lid on this potential crash, unless China were to just get absolutely terrible. So for that reason, I do think this is simply a correction. Sure, could you fall more than 10%? That is possible. So where does that leave us now, especially when it comes to Tesla? Because like I said, the NASDAQ is off about 6% from your all-time highs. And we'll go ahead and just double check. Looks like off your highs, close to that, by about 5.5%. We'll just call it that. Well, that means you could potentially see another about 4.5% drop. It could be more than that. It could be less than that. But another about 4.5% drop. Tesla tends to double what the NASDAQ drops. So that could potentially mean another roughly 9% from here. That would put Tesla stock at $211.90. Now, it's uncertain. It really depends on China and what happens. I think that's the vast majority of what's causing the market sell-off right now. Has nothing to do with the Fed, has nothing to do with anything else. It's all about China. And to a lesser extent, the bond yields. The 10-year Treasury yields are moving higher, which this is actually a good sign for growth in the economy, believe that or not. Right here and right now, it makes mortgage rates more expensive. It makes auto rates more expensive when you go to finance anything, basically, it's more expensive. But the higher the 10-year treasury, believe it or not, means that investors are expecting better growth in the long term. If the 10-year treasury were to fall and stay down, that basically means markets expect the Fed is going to have to cut rates dramatically within the next 10 years. This is saying, yeah, we're going to see higher rates for longer, but the economy will be able to handle it. So there's really a push and pull, where if you look at the 10-year treasury, it's screaming no recession. It's screaming soft landing as we're literally speaking. If the 10-year treasury could talk to you, it would be screaming, we're going into a soft landing. We're not going to see a recession. Growth is going to be fine. At the same time, the 2-year treasury is breaking out to almost new highs as well. This is mostly dependent on Fed policy, and the 2-year treasury, the fact that it has been rising recently, again, is showing that narrative of higher for longer, which is actually, again, a good sign that the Fed's not going to have to cut rates that much. Why does the Fed cut rates? Well, when the economy is doing poorly. So this is actually good for growth in the economy. This is actually good for the markets, believe that or not. Now, again, financing costs do go higher. The markets do have to adjust to that and account for that. It does make stock valuations a little bit less attractive because you can get 5% on a 2-year treasury. But again, it's a good sign for the economy. We have 3 catalysts happening tomorrow. Number 1 is Target. Target is going to be massively important because data points such as the Bureau of Labor Statistics, the non-farm payroll report, or the unemployment rate, all of these things are so far delayed. Even retail sales, these numbers get revised multiple times. So you really don't even know where they're at. You kind of get a glimpse that, sure, retail sales are positive 0.7%. Worst case scenario, they're still going to be positive, right? You get kind of that kind of data reporting. But then you get retail earnings. Target, Walmart, Home Depot, TJX. But really, Target and Walmart are the big ones. So Target's going to tell us how the consumer is doing. Number 1, that's what we want to know. How is the consumer doing? If the consumer is doing poorly, and Target, it makes it sound like the consumer is not spending as much as they previously were, that means, well, hey, this recession might actually happen. Same thing with Walmart. Walmart's going to be the more important one, but Target is obviously still very, very important. That's going to be the biggest catalyst or event actually happening tomorrow. The second biggest event is going to be at 2 p.m. Eastern Standard Time. That is the FOMC minutes. This is a transcript essentially of the last Fed meeting. You can get new details or changes to the statement that can be important and can move the markets. This does not tend to give you a follow-through move. What I mean by that is if the markets are down on the day where the FOMC minutes come out, the markets tend to just sell off a little bit more. It doesn't tend to dramatically change the day, but it can add fuel to the fire per se. Same thing to the upside. So that's going to be coming out tomorrow, and I'll cover that for you guys here in the video coming out tomorrow. And then you have building permits for July. This could be important just depending on how the numbers come out. It doesn't typically move the markets, but considering housing inflation is really the last strong part of inflation that has not come down really at all, it could be important because more building permits lead to more potential houses being built, which could mean less of that rental inflation. So that will be important coming out tomorrow morning as well. As far as Tesla stock news, this is by far the biggest piece of news that came out after the bell today. 3 Cybertrucks were spotted on a car carrier, but in this video, you actually see 3 Cybertrucks on this car trailer, and then you see a couple more on the other one ahead of it, like multiple Cybertrucks being transported. This, I would say, is good news. Now, what I found the most interesting when I first seen these videos is there's no wrap on them, there's no cover on them, Nothing. So these actually might be some of your final destination Cybertrucks that are being shipped somewhere else, presumably to be shipped somewhere else, which a lot of the time the first people that get new autos when they do come to markets are reviewers, and they can get them a month or two even in advance of the general public. So it wouldn't surprise me if these are for some reviewers, some auto reviewers. Wouldn't surprise me if we get a delivery announcement here pretty soon. All in all, positive steps in the right direction. The other bit of really cool news that we got from Tesla here in after hours was posted to the Tesla charging page, and they now are offering a universal wall charger or wall connector, so you can charge any kind of electric vehicle you have. Basically, this attachment right here will let you charge anything other than a Tesla, and then you kind of just pull on the main handle itself, in which you'll see in this video in just a second, and you could take just the Tesla charger, and boom, there you see it. Plug it right into your Tesla. It looks like this is going to cost about $595. I guess it depends on where you are. The pricing might be a little bit different, but still pretty cool. All things considered, if you have multiple different kinds of electric vehicles, maybe you have a Tesla, the wife has, a GM or a Ford or something, which hopefully that's not the case. Hopefully both of you guys have a Tesla. But if for whatever reason someone else in the household has a different EV, well, this is a pretty cool way that you can actually charge everything, right? And orders will begin shipping in October of 2023. So let's go ahead and summarize this video. What we're seeing and the reason why the markets are selling off, YouTube of the year right here,
YouTube here
is because China. That's
China.
what's going on. Say China. Say China.
China.
You're so cute. Okay, can you be quiet though?
That's a moon.
Can you be quiet though?
No.
Please?
No.
Please, or you're gonna have to get out the room.
No.
I'm being serious.
No.
Let's try that again. It looks like China is heading into a recession. Now, I wouldn't sit here and call it a depression. I mean, they're still growing, but not to the rates in which they want to grow. But the markets can handle bad news. They cannot handle uncertainty. And right now, that's all we have is uncertainty. We don't know how deep this is going to be. We don't know how much this is really going to affect the Chinese economy. We don't know how this is going to affect the US or the rest of the world, or companies specifically like Apple or some of your largest companies in the world that do business in China. Starbucks, Nike, Apple, all of these companies have 35, 40+% of their sales in China. This could be a problem, or it could be nothing to worry about. We don't know. That's why uncertainty is so bad. But the worst case scenario that could ultimately happen is China slows down, Europe's already in a recession, so consider that, and the US starts to slow down. Now, the first leading indicator that we're going to have on a potential slowdown is going to be Target earnings coming tomorrow. If Target earnings are bad and they have negative things to say about the consumer, well, that's very much concurrent information. We'll even get guidance for next quarter. And if guidance is bad, well, that's not going to look good. And then coming Thursday for Walmart, that's going to be very, very important as well. So long story short, Tesla tends to do a more aggressive move than the S&P or the NASDAQ on any given day. The NASDAQ has been falling. Tesla has been falling a lot more. I am probably a little too bullish on Tesla for good reasons heading into next year and over the next couple of years. I've literally been going broke buying Tesla stock. Bought more shares today, a couple thousand worth, and I will continue to do so. And I will put my money where my mouth is. And if the situation changes, I'll be the first to let you know. But right now, I see no signs that you shouldn't be buying Tesla, and that's not financial advice. But if you were bullish on Tesla at 300, you should be way more bullish on Tesla at 230. And the situation could get worse from here. The lower the better ultimately for long-term investors. So that's going to do it for this video. Hit the like button and subscribe to the channel. My name is Michael Tyler. Thank you for joining me here tonight. Most importantly, enjoy the rest of your day, and I will see you in the next one.